Welcome back. Now, could exchange-traded funds be South Africa's next big retirement trend? That's the big question that we are putting to Duma Mxenge, Head of Business and Market Development at Satrix. The group asserts that exchange-traded funds can be a smart choice due to its liquidity, cost-effectiveness, and its ability to offer portfolio diversification, offering a boost to your long-term savings or existing retirement plan. Duma joins us with greater perspective on this. Duma, thanks so much for your time this afternoon. And let's look at ETFs as an asset class, perhaps. Clarify what one would be investing into when putting their money into ETFs.
Essentially, an ETF is an exchange-traded fund. So what that means is it's actually an investment vehicle as opposed to being an asset class. And what that allows you, it allows you to actually gain exposure to different asset classes. So when we talk about asset classes, we have pretty much three distinct asset classes. So you've got equities, you've got property, and you've got fixed income or fixed bearing strategies. So essentially, what you're able to do or to achieve with an ETF is to be able to hold a basket of securities, different securities that gives you diversification with a single transaction.
And let's say I'm building, this portfolio alone. Walk me through an asset allocation strategy, right? Assessing the time I have, the money I have, the kind of risk I'd like to take on.
I think you've covered it all. So essentially what we tend to tell our clients is exactly that. We need to understand two things. What is your goal? And secondly, what is your time frame? And the time frame component is very critical because if it's a short term, then obviously you can't take too much risk or you can't afford to lose your money. Therefore, we look for strategies which are low risk, like a money market strategy or fixed income or bonds. If you've got a longer time duration, so when we talk about long term and medium term, so anything beyond, let's say, 3 to 5 years, then what we're looking to do is to actually invest in equities, a basket of equity shares that actually going to give you the desired return that you're looking for.
And in terms of equities, how do you go about advising clients when it comes to, I guess, local equities or international exposure?
Again, it's entirely up to the client. So the beautiful thing about what we're able to provide is access, easy access, and the products are easy to understand. So on the local equity strategies, we have what we call the top 40 index. So basically what you are holding there is you're holding a basket of the top 40 largest listed companies on the JSE in a single transaction, as I say, or a single fund. On the international side, I mean, the most popular strategy is the MSCI World, so you're getting exposure to the developed market. So you're looking at roughly about 1,800 stocks that you actually have an exposure to.
And how can ETFs be used in conjunction with other retirement saving strategies such as your tax-free savings account? And we also have the two-part system withdrawals.
Correct. So I guess maybe let's start with the two-part system. I mean, what the introduction of two-part system is to actually allow members who are invested in a retirement fund to actually tap into their savings once a year. Now, from a flexibility point of view, the event only happens once a year. And after that, you're no longer able to actually access your money. So what we're telling clients is before you can actually access the money, because you're also going to be penalized in terms of tax, is you actually then supplement it with an ETF that actually sits alongside your retirement fund. So it's more like the first entry into, let's say, and as we know, life happens and people need to tap into their money. We say first start with your ETF that actually complements your retirement. And then if it needs be, then you can go into your retirement fund. You also mentioned tax-free savings. The beautiful thing about tax-free savings, as the name says, is that any growth of dividends is not taxed. So again, you can use that and actually invest in ETF in your tax-free savings account.
And in terms of trends, Duma, are you seeing clients, consumers using products like ETFs to supplement their retirement?
Certainly we are. I'm fortunate enough to also interact a lot with trustees as well as principal officers. Even before the introduction of, let's say, tax-free savings or even the two-part system, what we tend to find is that, when we actually engage pension funds, they do actually tell us that over and above their contribution to their retirement fund, they are actually investing in our ETFs. So we are seeing that trend taking place in South Africa.
And let's talk about how important, I guess, consistency is when it comes to investing, Duma, and what role regular investments play in taking advantage of compounded growth?
So what we also tend to encourage a lot of first-time investors and also professional investors that, I mean, you know the saying about, don't try and to time the market. So when you actually open up an investment account, the idea is to actually open a debit order. What that allows you is, like any debit fund, is that all you're looking to do is that you get into the discipline of actually putting a contribution. Before you know it, after 5 years, you'll be quite surprised in terms of the growth that you'll be able to enjoy during that period of 5 years, but having the discipline of actually staying consistent in terms of making a contribution.
So whether it's 100 Rand, whether it's 1,000 Rand, anything matters.
That is the beautiful thing. I mean, a lot of people think that you need to actually, let's say, save up to 10,000 Rand before you can start your investment journey. The beautiful thing now is that, with digital investment platforms, is that the minimums are low. In fact, if you look at our platform, which is Satrix now, there's no minimum. So basically, you can start with 10 Rand, you can start with 20 Rand, and so forth. Again, I mean, we do encourage debit order, but, if you can actually invest as when you can, we also encourage that. You're not being penalized. It's your money. You can access your money whenever you want to.
All right, Duma, thanks so much for your time and just taking us through that in greater detail.
Thank you.
That was Duma Mxenge, Head of Business and Market Development at Satrix.